Welcome to Culturenomics with Arjun. The show aims to unravel the layers of the fintech sector and the rapidly evolving tech startup ecosystem across the MENA region and beyond. I am your host Arjun, and I will be inviting founders, executives, investors, regulators, and other influential stakeholders to discuss and dissect the highs and lows of their own ventures and how they foresee the wider ecosystem evolve. Join us as we celebrate success and the spirit of risk-taking, the candid discussion that goes past the timid question and cautious answers. This show is produced in collaboration with Arjun, a reliable end-to-end payment solution that enables businesses to turn payments into a strategic growth driver. We're also brought to you by Lulu Financial Group, a global financial services provider headquartered in Abu Dhabi and operating in 11 countries. Finally, Culturenomics with Arjun Singh is brought to you by M2P Fintech, Asia's leading payment infrastructure company that enables businesses of any scale to embed financial products. Well, welcome to today's episode of Culturenomics with Arjun Singh. I'm your host, Arjun, and I'm joined by Ibtissam Ouassif, who is the co-founder of Cashew Payments, a BNPL player who operates in the MENA region. Ibtissam, welcome.
Thank you for having me.
Are you comfortable on the couch?
I am extremely comfortable.
Right. Don't worry about the cameras.
No problem.
Right, because they scare the hell out of me. So just let's focus on the discussion.
There's too many of them.
Right, there are too many of them, as you said correctly. Ibtissam, BNPL, right? It's a sector, in my view, which gets more ink than it deserves, right? And unfortunately, sometimes for the wrong reasons. I usually get a lot of flack because I guess I'm one of the cheerleaders for the sector. But it's, in my humble opinion, or in my not so humble opinion, I think the sector is slowly and steadily moving in the right direction. I think, players are maturing. I think some of the smaller players might find it harder to survive, so it'll wash away. I think some of the bigger players are finding funding. And I think, as I say that, I should congratulate you guys on the recent announcement with Mashreq. And actually, what's quite interesting about that deal for me is that this is not a line of credit, but more of an equity investment into you guys as a BNPL player. So, spill some beans.
Sure.
Tell us what's the thinking between both parties in terms of go-to-market with this partnership or this equity investment.
Sure. So as you said, the BNPL market is a bit saturated in this region as well. There's many players. So we thought about how can we differentiate ourselves from the rest of the players in the market. Not just in this market, also looking at the landscape, the BNPL players in the rest of the world and their unit economics and their business model in general. So we thought, what could we do better in terms of business model and in terms of also product offering to differentiate ourselves? And we thought that it was best to do so with a partner. And what's better partner than a lending institution? We call them so traditional banks, but there is a few of them that are actually trying to move away from the term traditional and breaking through the fintech ecosystem and with the latest technology and the latest products. And actually, there was no better partner than Mashreq here, at least in UAE, as well as we'll mention in other countries within the Middle East. So actually, our relationship with Mashreq started about a year and a half ago. We got in touch with them just for them to be our acquiring partner. Obviously, in order to offer buy now, pay later products, you need someone to support you with the payment rails, and we got in touch with Mashreq, and they've been actually monitoring our performance in the past year and a half, and they actually were the ones telling us, okay, share with us a little bit more data, share with us a little bit more of information about the buy now, pay later space, because they were interested in knowing how they can do lending differently than the current product suite that they had. And we started working together with all their actual departments. It was not just the acquiring team, it was also risk. So we were looking at the credit scoring modeling and how we were doing so. With the product team, what are other products that we can offer in the market? from apart from the traditional lending, which is with the traditional buy now pay later, which is paying 3, right? What we can create together that can go beyond the normal product offering. And obviously fast forward to just last month, where we were able to announce our partnership, Mashreq decided that actually they've seen, like you do, that buy now pay later can grow bigger than what it is currently, and they decided to take a stake. So they put their money where their mouth is, and they took a good stake in Cashew, and that's just the beginning, right? And together we'll be offering a different product suite within the buy now pay later ecosystem, and thanks to to this partnership and to their support, we'll be able to also tap into industries that we wouldn't in case if we were alone offering this type of services. So we're very excited, and I'm looking forward to unveil a little bit more on the product.
Right, I'm going to have you unveil a little bit more in the show itself. So you said the market is saturated. I think my view, and apologies, I'm not disagreeing with you, but I think what we're saying is that I think, yes, it's saturated to the extent of the penetration the sector has achieved. And let's be honest, BNPL currently is, your penetration levels are below 5%, below 2%, maybe 1% point of sale. I think there is enough headroom for growth, right?
Definitely.
Having said that, I do think that not all players are equal. Some are extremely well funded, especially a couple of the incumbents who came out to the market earlier. They did an excellent job at sort of cornering the VC market. The other player, there's one in Egypt, which, I have a lot of regards for. And there's another one out of Saudi Arabia, which seems to have done well. There are what I call tier 2 players who are also there. Some of them are facing challenges than the others. But the question is not about what's going to happen and whether there will be some shakeout in the market. Any market will go through a shakeout, and we're at that sort of end of the cycle in any case, where I think venture debt or venture capital is going to be hard to come by. And if a BNPL firm does not have the balance sheet, then in effect there's no business, right? But the more fundamental question here is, unit economics for a pure play BNPL player are incredibly tough to make money on, right? And especially in a market where interest rates might be rising, merchant power is growing, so the subventions are dropping, and customers are expecting better experiences, more value adds. It's only a question of time when BNPL players will start offering some sort of reward mechanism to entice customers. Some of them are already doing it. So globally, we're actually seeing Klarna trying to become some sort of a shopping super app. You have what I call thematic BNPL players come out. You've got Cashew, we've got Walnut in I think in France, which is targeting healthcare. You've got a whole new breed of B2B BNPL players coming. Where does Cashew go next in its model? So great, you've got the bank, and that'll help you with ubiquity of acceptance, arguably easier access to capital. But fundamentally, is the model going to evolve for you, and where do you think it's going to evolve? So
in Pay by Tree, actually, the unit economics is very restricted, specifically here in this region, because it's free for the users. The consumer don't pay any interest fee or processing fee. The only charges are to the merchants, where they provide a discount to the buy now pay later company, and the discount rate also is very low because you're competing with the MI installments rate for credit cards. The merchants still moving away from that concept, right? So in order for us to make our unit economics work, we want to actually venture more into the lending space in general.
So you want to become more of an Affirm
Exactly. That's the
And
business
that has
model.
always been the dream of your founder.
Exactly.
Right.
That was always the dream of Amar. Obviously, he's from the US, and himself, at a younger age, he utilized certain services also from other pay later companies in the US, and that model works pretty well. That's why Affirm just announced that they're going to be profitable next year, right?
Yeah, they have announced, and I think they are moving in the right direction. Unfortunately, the stock market still beats them up. But
like any other technology company.
Yeah, a little bit more than any other technology company. I think that there's also the the hangover of what's happened in Australia, where there's been carnage on the street with majority of the players who have lost as much as 90% of their valuation. I am worried about that because that doesn't paint the sector very well.
Exactly.
Right. So Cashew Payments evolves into becoming a multi-product player where you will kind of carry on, I'm assuming, with your BNPL.
Sure, we can label it as buy now, pay later, because that's what it is. You enable consumers to buy now something and pay for it later. But the way the product is structured is slightly different than the.
So you're going to get rid of BNPL entirely then?
We would like to.
Okay.
Right? Eventually, 1 year, 2 years down the line. So BNPL for us was the entry point. It happened at a time where during COVID or post-COVID, where consumers read, adoption of buy now, pay later was growing at a tremendous rate, right? So we wanted to take advantage of that. But buy now, pay later was always just an entry point for us. We want to venture more in longer tenures, 12 months, 24 months, which does not really buy now, pay later. That's financing, right? In order to do so, you need a partner. A small fintech or a small startup can't offer up to 24 months. It's going to be difficult for a 1 year or 2 year startup. So that's the reason why we needed to partner with a bank. But also once you venture into 12 months and 24 months, also the ticket size increases, right? We're talking about 24,000 dirhams, 50,000 dirhams, 100,000 dirhams, and then we're talking about different industries, right? Healthcare, education.
But you're already in education.
We are already in education, but smaller ticket size. We started with nurseries. We started with courses. We want to venture in actual 60,000, 80,000 tuition fees. We want to get into university fees as well, or MBAs. So I think there's where you create value in people's life, when you tap into certain industries where actually individuals have a hard time paying for something in full upfront, and they might need to utilize an installment-based payment, right? Not just for retail. Retail is great. It's an entry point, lower risk, right? We can label it as lower risk because it's a small ticket size and the tenure is shorter, 3 months, 4 months. But in terms of industries like education, insurance also, and travel one day as well, that could be also.
But then, so let me ask a question, Ibtissam. I'm sorry, I'm going to put you on the spot on this, right? So you will completely cannibalize consumer lending for your banking partner?
No, we're not. We're actually, we work as
or you'll become just a pure play technology partner.
The bank partner doesn't need just the technology, right? Right. So because it depends on who are the consumers that you are targeting. The consumers that the bank currently service a higher, not higher, it's an older bracket, right? So if you want to service the below 30 years old, like from 23 and above, 23, let's say 23, 30 to 33, they would like to use mainly fintech companies and tech companies because they're tech savvy. The product gets delivered seamlessly in a seamless manner, easy access and easy approvals and easy onboarding and maintenance of the service as well. We feel like banks can, at least at this moment in time, have a difficulty in providing certain products for various reasons. Technology is one, because they're using legacy platforms, and for them, in order to provide certain services, is going to be difficult. But also, I think talent is still the.
Who's going to drive the risk policy?
Actually, it's both teams. We already worked on that previously. We have scorecards that are jointly combined because there's a revenue share, right? And revenue share is based on risk also. And we have to work on it.
But with these ticket sizes, are you going to then become a fully regulated product by default? Even if the regulation doesn't come for BNPL, because then on all intensive purposes, when you start charging the consumer interest rate, you have actually become a micro lending or a consumer finance product.
Mm-hmm.
So,
but that's the point to partner with a lender. They already have that license. So you're jointly providing that.
So
service.
my money is on you guys completely. Then, you will cannibalize the bank's consumer lending business.
Well, this should be the goal. Together with the bank partner.
No, I agree. No.
I'm not saying here I want to take a market share away from the banks.
No, you're not going to take market share.
Or compete with banks.
You might actually grow their market share because, as you said, the onboarding of the process might be better. It is end use driven, so therefore you're available at the point of sale, where currently consumer financing is not a point-of-sale product. No. It's a product which gives you a sum of money which you can then deploy somewhere else. But I can't. So in a way, you immunize yourself against any regulatory movement against BNPL tomorrow if you sort of shift out of what we define as BNPL, which is a zero interest product for a consumer, and shift to an interest-bearing product with the bank providing the balance sheet and arguably the license through which you actually share. Interesting, because this would be very similar to what we have seen in the US, because the Affirm model is slightly different, right? Because the firm actually buys back the portfolio from Cross River and takes the risk back on this case. In your case, you're not doing that.
We're not doing that. There's a revenue share with the bank partner. If we do great, we both win. If we don't do great, we both lose.
No, I think in my discussion when I have Mashreq on the couch, it'll be interesting to hear their perspective, right? So this is great. Next question is awesome then. So step outside the world of BNPL, put yourself in sort of my shoes or my seat, because I'm not in BNPL. You're still operating BNPL. Where do you think the regulators are going to go with BNPL regulation? What do you think is going to get regulated first? At least, even if you take UAE as a market, what are the 2 or 3 things do you think the regulator is going to try and achieve?
Well, first of all, as we said, like the buy now pay later here, it's free for users, right? I think first we need to maybe put a framework on pricing. It's unfair that the buy now pay later providers have to provide a service at zero cost for the users for God knows how long, right?
But that's your choice. Nobody forced you to.
Oh, no, definitely that's the choice, right? But eventually you need regulation, so that the regulation should support both consumers and the service provider, and the whole ecosystem should benefit, right? Yeah. So, and I think that's something that should be part of the regulation itself, because I don't feel there is need for consumer protection in this case in buy now pay later, at least in this here in this region. I can't speak about the Western world, whatever is happening in UK or in Australia, because it's capped at 1 transaction at a time. So if you default on your first transaction, you will not be able to utilize the buy now pay later service, right? So I don't think we have to get into consumer protection as yet.
But shouldn't you guys be sharing data?
We would love to, and this is what I was about to get into next, that if we can even make it slightly better, we can go into the next step, which is if you have it with any buy now pay later currently in this region, you shouldn't be able to be accepted by another buy now pay later player, right?
So you mean if you default with one for one,
with one, you shouldn't be accepted.
But that's something which you guys have chosen to enforce yourself. Nobody's told you that.
No. But it's great you should regulate.
The data, right?
Yeah, the regulation should start within first, and then the outside world should.
So why hasn't the sector? You guys have been at it for a few years. Why haven't the handful of players? And let's be honest, there's only 6 or 7 of you. It's not 25. Why haven't you guys all come together and done something around self-regulation?
We would love to, but I think the current feeling is that, because it's a competition in terms of merchant acquisition, let's be honest, right? So I think now everyone's just focusing on acquiring merchants, so it's seen more as let's compete with each other rather than let's work together in making a better ecosystem. Okay, I think that's the reason why. I think everyone now is focused, let's acquire as many merchants as we can, and then when it's stable a little bit on those terms, then maybe we can discuss what's the next step.
Fair enough. I
think that's my feeling.
No, and that's fair enough. That's an argument. I personally, I do not think that is an either or. I think you could do both. But this is not you're the expert here. I'm here to ask the question, but let me ask the next question. Let me ask you a merchant's question here, right? So, do you see merchants sticking to one BNPL player, or do you think at least the large merchants will eventually, some of them have already started, will eventually start opening up their doors to multiple BNPL players, because for them, it's about reducing friction of a purchase, right? So if someone wants to walk up and say, I want to use Cashew versus X, why wouldn't that merchant offer Cashew? So
Definitely.
are you starting to see that already?
We've seen it. Some merchants are adopting this strategy because it's as sort of as you say, as a merchant, you say, I will accept a Visa but not MasterCard. Why would you do that, right? Or I wouldn't accept UnionPay, or I wouldn't accept Mada, or whatever it is, right? So it's a payment method. The user actually chooses which payment method they should adopt, and it should be multiple, right? Not just for that. First of all, for the user, and we, whenever I discuss with merchant partners or big retailers or whatever, I say you shouldn't. I would recommend you to have only one buy now pay later player, right? Why? For various reasons. Because your consumer might have an account with another one, and they're more familiar with that other provider, and vice versa. And then also pricing. Right? And competition is healthy for various reasons. And at the end of the day, actually is in benefit to the merchant partner, because if you are linked to only one player, it's hard for you to negotiate in the future and anything.
Yeah, and I think the acquirers are going to do that, right? The acquirers are going to do that because they want to build stickier relationships. So they'll stick as many BNPL players into connectivity. And most acquirers are moving to this sort of platform-based model in any case.
Exactly.
In any case, I've got loads and loads of questions on BNPL. I'll never get them answered today. I'm going to shift to something which is more about you. We talked about it, right? I call it financial services for the good. Talk about the philanthropic work you do.
So actually that started very early in my career. I'm from Italy.
You're fairly young. So
I'm fairly young.
How early did it start?
Well, about 14 years ago, 13 years ago. That's, for me, it's early. For me now, it's a long time ago. Well, obviously, I'm from Italy, right? From Sicily. So you have some history there
I do
too.
have history with Sicily. We cannot talk on the show.
Okay. So you know what are the challenges that we face there when it comes to immigration, refugees, asylum seekers, and all of that. So I was very interested in the early stage because from family. I'm an immigrant myself, or my parents, let's say,
You're half Moroccan.
Half Moroccan, right? So my father immigrated to Italy at a very young age as well. So I have that in me to help others the way other people helped us or supported us during those times, right? So I wanted to always to give back, and I started at a very early stage in my life when doing so. And
you
it
can
was
say
a
you
great
were
experience.
17, you told me last.
I was 17.
Right,
Yeah,
okay.
I was 17.
That is early.
That's early for me. Well,
I actually did not know what I was doing at 17.
That's where you
I got very faint memories of those years.
Well, that's good too. That's good too.
I'm sure.
So that for me, and I started working in the philanthropic side and more like non-profit. We started a non-profit with some colleagues of mine in order to support. Actually, was sponsored by the government, by the Ministry of Interior in Italy, and we started supporting children and their parents, asylum seekers, and all of that. And we still see that in the world today. There is still a lot of underserved in many areas. In the financial sector as well, right? So for now, obviously, buy now pay later is mainly focusing on a different income bracket, but eventually, I would like to venture into lower income bracket, the actual underserved. Within this market, there is a lot of underserved in this market, right? So how can we make sure that they get access to finance the same way other individuals do get access to, right? So we'll do a little bit more of that in the future, and I would love to have a success story of obviously with Cashew, then venture into something that can.
So you've already got your next venture lined up.
Thinking about.
It's actually your
going
old
back
venture.
to
It's your old venture which comes back,
yes.
right? So Ibtissam, I'm conscious of time. We've
Sure.
as you know, we overrun every time we sit down and we talk. I'm very happy for Amar and you with the Mashreq deal. I think it sort of gives you guys that sort of platform from which you can sort of evolve and eventually become the business you guys always wanted to. I think BNPL as a space will be an interesting one to watch for the coming few years, especially the next 12 months. It's going to be interesting in terms of the crunch in capital that exists and how some of these players are going to navigate. Hopefully most of them will find a way through it. Right. So we're going to go from BNPL to philanthropic Ibtissam to Metaverse Ibtissam, right? So last time we met, you spoke and you don't speak much usually, but you spoke nonstop about how the world's going to be different and we're all going to be embracing the metaverse and the Web3 will be a reality, which for me is a myth, or at least it's a myth for the foreseeable future. What's your take on the metaverse, right?
Well, I think I would differentiate the metaverse with Web3.
Yeah,
right?
Thank you. That's a good start because a lot of people are not doing that, but that's a good start.
So I'm a firm believer of Web3 and what's going to look like, and not near future, but maybe
complete anarchy.
Not really. But I see they call it decentralized. I don't think there's going to be so much decentralization. I think it's going to be a mix.
Right.
We spoke about it.
Yep. Bunch of centralized firms making us believe we live in a decentralized world.
Well, let's see. Communities.
That's just me being cynical.
Yes, very cynical. But the metaverse in general, I see it more of like a gamification type of thing. A lot of services and maybe products and experiences are going to be gamified, right? We've just heard like there is a fund, Henderson & Morris, like they just raised a fund of $600 million to be invested in the gaming industry and Web3. So I think there's going to be a lot of change there. The way we experience things and we leave things is going to change. But not the way we know it today. I think a lot of work needs to be done till we get there. In terms of Web3, I'm a firm believer in DeFi and obviously being in the fintech space.
I like reading about DeFi.
Right? So I'm not sure about the terminology of decentralized finance. Is it decentralized or not? But the product and services they're going to be enabled because of the blockchain, we will make tremendous advantage in the product offering and times in the way we consume those type of services, and I believe it's going to be great.
No, I think you said something and it stuck with me from the last time, is that one should actually watch where talent moves, right?
Exactly.
And that's a fairly decent bellwether to see what's next. And as you said, not only the capital inflow into sort of blockchain or Web3 or related technologies, but actually if you see the shift of talent in that sector, those two together, are a fierce combination, right? And there is good, there's an expectation of good to come out of it. Right. A lot of people, I think in the past have said, blockchain is an answer looking for a problem. I think could be partially true because I think when it came on quite strong. People actually did not understand it entirely. But there were some early successes, things like smart contracts and so on and so forth in certain sectors. But I do agree that I think the future blockchain will play a very, very critical role going forward. I think digital currencies are going to be a part of our life, whether they're CBDCs, stable coins, or crypto. I don't know if Bitcoin is going to be worth $1 million or not. I think they will be a part of life. I think gaming will be the poster child, at least for metaverse, because I see the metaverse in my simple world as an extension of the internet. And as a gamer, it's that 2 hours when I try and sleep and I can't, I actually do get onto my Oculus 2, and I do play around a golf. And to be honest with you, it is, and I'm sure the technology is only going to get better, but it's fantastic, right? I thoroughly enjoy playing around a golf. The flip side is I'm putting on weight because the little exercise I used to do, right, even that has stopped. So we're all going to be fat people sitting at home with headsets. Well, I'm exaggerating the point, but we're headsets and living our lives in a very unsocial environment.
But how about the way you access to lending, though?
Huh?
The way you access to lending, for example.
The way I access to lending?
In Web3. How that's going to look like for you.
Well, to be honest with you, it'll be embedded, no?
Yes, within all these experiences in your Oculus.
Yeah, I personally think because I'll have a digital identity, and I think I'll just be asked to wink, and I'll get my loan, right? So, because what else are we doing today? These days, we just press a button and we buy an app on
the App Store,
on app stores, right? So tomorrow it could be a wink, right? So I personally think where this immersiveness is going to be about everything, that immersiveness, because we're going to demand it, right, from the customer journey, right? And not only that, I was talking to someone earlier today, and he was literally talking to me in Ethereums, right? And I kept telling him, like, dude, I actually do not know what the conversion rate is today, right? So
I think they're that immersed into that.
He's so immersed, this gentleman. He's like, if you want to invest, you need to invest 25 Ethereum. And I'm like,
what is it?
How much is that?
How much is that in the real world currency?
With dirhams, dollars, give me a number that I understand, right? But there are people like that, and he's an incredibly bright young man, and I think more of these bright young men and women entering sort of the world of Web3, metaverses, digital currencies are definitely going to shift, and this shift is going to happen. So I think it's the speed at which it's going to happen. I think adoption. I think there'll be a few misfires, but you're already starting to see people use the metaverse in daily commerce. And to me, that's a great place to start.
I was about to say, retail, like it's shopping, how you experience shopping in the metaverse is already.
Right. So I expect that to go on. So in any case, this is yet another show where we've got yet another conversation on the metaverse. I think I'm going to rename the show from Couchonomics to Metaverse with Arjun Singh. But
one day,
right? With that, we'll say goodbye, right? Thanks a lot for coming in.
Thank you.
Right?
Thank you for having me.
Goodbye, everybody. I had Ibtissam over on the couch today. She's a co-founder with Cashew Payments, but she's also someone who's doing philanthropy when she was 17, and she wants to get back into it. I don't want to know how old she is, but she tells me it was a long time ago. and she's also another advocate for the metaverse. So I think with so many advocates for the metaverse, we better all believe that the metaverse is a reality. So goodbye, and till the next time.